Good morning. We are here at the 2018 Chicago Traders Expo. I'm Marvin Appel of Systems and Forecast Investment Newsletter, here with the renowned market technician, John Bollinger.
Nice to
Thank you. I meant to ask you, since about your indicator, do you find that there are any time frames that it's most useful, or do you find it's equally valid across, whether you're doing 60-minute, weekly, daily charts?
It's a great question, but before I answer it, I want to say I really want to reverse the tables here.
Okay.
I want to interview you on systematic investing and such like that. I mean, I'll be a good guy and I'll be the guest, but maybe sometime in the future we can turn the tables around and I can interview you.
That would be my pleasure.
So the truth is that I developed Bollinger Bands for the daily time frame. It was the best time frame to trade in when in the 80s, early 80s when I developed them. And the second time frame that I probably used them in was the weekly time frame. Then as real-time data became available to us, I moved down to the hourly time frame. So I had three time frames going. My center time frame was always the daily, and I had a short-term reference using hourly charts and a longer-term reference using weekly charts. And I've always done that. I've always, short, intermediate, and long, combine them into a rigorous approach. But the key is the Bollinger Bands and the related tools and techniques work really well as long as there's enough volume in each period to see the price formation mechanism at work. So if you have an illiquid stock, some small little low cap OTC number, maybe you can only get as low as dailies. But if it's something like the SPY or the E-minis or something like that, you might be able to get down to 10-second charts and still have the basic mechanisms work.
Okay, so you're basically saying it works across a wide range of time frames as long as there's enough market activity to fill out the bands.
Yeah, exactly.
And do you, your talk yesterday, you discussed how you started in equity markets, and much like my father, basically had let's say an early tough experience, and that motivated you to really get in deep. But do you use Bollinger Bands in your own trading on other markets, or mostly equities and indexes?
Well, mostly equities and indexes. ETFs, obviously. Right. These days they give a tremendous advantage in terms of being able to snipe and get sector or group exposure when we want it. But mostly equities. But I've used them on foreign exchange, where they work really well. And more recently, I've used them on the cryptocurrencies, and they work very, very well as well there. And in the past, I've used them in futures markets. But I'm primarily an equity investor, always have been. It's my first love, and the vast majority of my effort goes into equities and stock market related indicators.
And do you find that they work as well on individual stocks as well as they work with ETFs? Because personally, I use your indicator. We mostly trade ETFs and track market indexes for our clients, but we have much less experience with individual equities. How does your experience compare between individual equities and ETFs or market indexes?
So I think they work very well on individual equities. They work, I think, better on smaller equities than larger equities, but it's not much of a differential. And I think that's because in the smaller equities, there's less arbitrage, there's less mechanical trading, less AI trading, and such like that. So I think the signal-to-noise ratio is a little bit better in smaller trading. I always like to say when I'm traveling, I go to Italy or Asia, or something like that, and everybody wants to trade the big U.S. markets, and I say, but it's easier to trade your home markets where there's less noise, where there's less arbitrage and less craziness. And they go, no, I want to trade that big market. I go, oh well.
Well, this has been very interesting. We have to take a break right now, and we'll be back after a brief pause.